to episode number 2. Today we are going to talk about a few points that makes Melbourne property attractive to foreign investors. Point number 1 being the exceptional population growth. Melbourne is adding 327 people a day as it draws residents from around the globe and around the state, with new figures revealing the city's population swelling and on track to overtake Sydney within a decade. According to Australian Bureau of Statistics, data showed the Greater Melbourne area added a whopping 421,000 residents through 2017 to 2018, taking the city's total population to a record 5 million. Based on current growth rates, Melbourne will overtake Sydney as the nation's most populous city in 2026. The last time Melbourne was larger than Sydney was early last century. For investors, Melbourne population story is exceptionally compelling. It remains one of the world's fastest growing cities. More than 100,000 people move to Melbourne each year. 35% of all overseas migrants also gravitate towards Victoria, and its population is set to further increase by 10% in the next 4 years. With extraordinary population growth and unemployment sitting at below 5%, housing demand is not going to slow down anytime soon. Point number 2. Vacancy rate across the states. Median rent for houses in Melbourne remain at $480 per week, but median rent for apartments saw an increase, with the average price now sitting at $445 a week. Real Estate Institute of Victoria President Ms. Leah stated that there's a strong demand for more rental properties, and sadly many families are still struggling to get a rental home as vacancy rates being 1.6%. Healthy vacancy rates should be around 4%, but most of the states is sitting at 1 to 2%. Increased demand has led to rental price climbing. With vacancy rates having stayed below 3% since March 2016 in Victoria, more homes are badly needed. The government needs to work more closely with landlords and the real estate sector to ensure more homes are available for rent. This brings us to point number 3, capital gain opportunity. Despite the generally positive run on population growth and vacancy rates, Mr. Gradwell, the Associate Director of Property at ANZ, said that the economic and property indicators across the Victorian property market remain a mixed bag. On the economy front, the recent bushfire and coronavirus present some challenges. Coronavirus will have a larger impact. A recent ANZ research note forecast the bushfire to take 0.2% of GDP, while coronavirus will shave off 0.5% due to the impact on tourism and foreign students. In terms of property indicators, there have been tentatively positive numbers coming through in building approvals, which signal a positive turn from very low levels seen throughout 2019 for both apartments and houses. That said, it's worth highlighting the large lead and lag times before getting product onto the market. Even if building approvals start to pick up today, there will still be housing shortage in the short term. Moving forward, Mr. Gradwell said that 2020 is shaping up to be a good year from a housing standpoint. Anticipated rate cuts will further support price growth for existing and new dwellings, both across the house and unit markets. First home buyers will also continue having a solid presence across the market despite complications in affordability. Vacancy rates are already low, and if we are not building enough for the remainder of the year, it's likely the vacancy rates will continue to fall and result in continued rent increases. However, investors to be careful about where and what they buy and ultimately recognize that while the property market is recovering, significant capital growth is unlikely to happen over the short-term period. As a foreign investor, you may want to take advantage of the weaker AUD and low interest rate. The Australian dollar has fallen to its lowest point since 2009. A falling Australian dollar is often a sign of a slowing global economy. This is because the Australian dollar is closely linked to commodity price movements, which in turn are often driven by how the Chinese economy is performing. When the RBA cuts interest rates or is expected to cut rates, this also pushes the Australian dollar lower. You might be thinking, as an investor, is it a good time to invest now? From state to state, each of the market is doing slightly different things, but the broad point applies across all markets. Coronavirus is everywhere. Its impacts on the property market will be everywhere too. The Melbourne market has been strong and the vacancy rates aren't as high. But there's no doubt coronavirus will increase caution among many buyers and encourage a lot of sellers to defer. 2020 will in many ways be a hard year for the economy. While the big companies may not lay off a lot of people, a lot of small businesses are facing the prospect of low revenue. The RBA has talked about a rebound in the second half of this year. Hopefully it's right, but let us expect it at least by 2021. Either way, it's important to remember the rebound will happen. Property analysts have also sounded a note of optimism, pointing to pent-up demand possibly being released later in the year, even stating good buying opportunities to secure properties at a competitive price and at ultra-low interest rate. This is somewhat what makes Melbourne property attractive to foreign investors, and we hope you get a basic insight of investing in Australia. Thanks for watching and we'll see you soon.